Good morning, gang. Good morning. Welcome to this week's Bitcoin update. First and foremost, remember, nothing to discuss today is financial advice. I'm not a financial advisor, and this is for educational purposes only. And now that's out of the way. What an exciting few days we've had. So, obviously, since last week, obviously, we had the drop down, and then we've had a 35% pump to the upside, back into the macro range highs again. Everyone started getting overly bullish up on this wick, and I'm going to talk through today the short that I took, talk through the long that we took, and what I'll be looking for next. So first and foremost, let's have a look about, obviously, last week we were recording and we would have been here just before, in fact, the day of the drop that started last week. And this was the public YouTube video that we released at the time. I'm just going to play you a quick snippet of it, so you can see what we were talking about. Now, and then if we do lose this level here, then it becomes very thin. Okay, so there's one thing that you can take note of is we do have this psychological 20k level down here, which also lines up with the CME gap. But again, you know, just to blindly long something like that, if price does get down here, then you're a bit of a fool. You'd want to see at least the market structure change down here before you start trying to long down here, if it does get there. And just like that, and this is what we were talking about down here. So obviously this was the psychological 20k level coinciding with a CME gap. And this is the level that we threw on the chart at the time. It was roughly down here. Let's just draw this as a key level. There we go, we can see now. So a key level. And what happened in the end is we came back down into this key level. We closed the CME gap. Now, as I was saying on that video, it was a region that I wouldn't have blindly longed at all, purely because structurally there's not much support here. Obviously, we had the CME gap. We also had a golden pocket here, which was from this pivot low up to the current pivot high at the time. So if we just throw this on a standard fib retracement, we can see what we got here. Straight into this golden pocket, into the 618. And what I was looking for at the time, zooming in, so let's get down to the 15 minute, is I was looking for a change in structure. And what we did have is we had a change in structure, which is why in the group we took the long. So we can see here that obviously we came down, bounced, and then from this point here, we came up, we took out these highs, and we created a new low, but a higher low and a higher high, and then we just continued this uptrend. So for me, this was a good long opportunity, which is why we took the long in the group. From that, we followed this long all the way up, and we did continue up quite well. Let's come back out here. And what we came back into, ultimately, was the overall macro range highs. So if we throw this on now, zoom out to the daily, let's get rid of this level now. We came into the range highs again. Now, as I've been saying on the public YouTube and in our group, I've been saying that if we do come back up to the highs again, then we've still got an option for another deviation. Take out these highs, take the liquidity, get everyone bullish once again, and then slam price back down. Ultimately, I did have eyes on this level. Now, in this event, obviously this was during a CPI news event. I was live within the group, doing some live trading, and we were talking about this level up here. But in the end, we didn't manage to get there. But what we did get is a bit of a failed rally. And what we can see here, if we look on the order flow, now this was the peak of the move. Obviously, we had this huge run up. And obviously, this is where we get mostly new longs opening up, trading this breakout. Everyone's getting overly excited. That's it. 30k is on the cards. 100k, that's it, macro lows in, yada, yada, yada. Everyone's getting uber bullish. And what we can see here is we can see it on the volume. So we had this huge push up on 391, well, call it 392 million volume. Right, and this is on Bybit on the inverse chart. You know, 13.5 million positive delta. Coming up, everyone's smashing market buy. And then what we can see here is when we peaked again, the volume then dropped off. Less than half of the volume. And then we dropped off again. And then the volume just disappeared. So they didn't have the continuation. One thing that you've got to take into note, when price action or when an asset is trying to move in a direction, you've got to look at how good of a job it's doing, right? So this first push was a good job. It was a good job. You know, Lots of new positions opening. We can see that from open interest. We can see positive delta. You know, we see a load of volume, but they just didn't have the balls to carry on. Okay, so they just dried up. And then what we had here is this final push up, this final stab of the wick. Now, this is a 30-minute candle here. And we can see, look, all the volume is up at the top up here. This is where the point of control of the candle is. It's all up at the top. And then once we close back below it and come back down, we never came back up to retest this point of control. So as we were live in the time in the group, we were talking about this. And then just after the stream, I came into the group and I said, I've entered a short here. Stops above the highs. Now, one thing that I don't give out in the group is I don't give out signals, but I do now and again tell people when I'm quite happy to take a trade. Okay, and then what did we see after that? Then we saw some bearish divergences forming. Now, as I was saying at the time, now one thing about divergences is on CVDs, I want to see them confirmed. I don't want to see speculative because sometimes they can give you a false signal, and this is where people go wrong with it. Okay, and this is something that I teach within the group. Now, no, we started to build bear divs, but as I've said here, it's not bearish divergence yet. We need to create a lower low to confirm, otherwise it's leading. So effectively, the longs, the market longs are still pushing price up, but in the end, it then started to roll over and create a lower low, which then, in turn, created bearish divergence. And again, keeping the guys updated, still starting this, but the longer that we're range here without losing structure, the weaker the idea becomes. So I was looking for acceptance back into those single prints. So again, I'm talking to the guys in real time. I'm giving the members the updates as and when they want it. Okay? Giving them some confidence on their ideas. Right. And in the end, what we had is, if we come out here, we did have the block of single prints that was created here. And this is what I was posting. If you follow us on Twitter, you'll see this on Twitter. Okay, we had this block of single prints that were created. And at the time, it was up here. So we had these single prints here. Now, other trading styles, they'll call these fair value gaps. You know, at the end of the day, it's all the same. It all refers to TPO theory. Okay, so it all refers to this, which is TPO theory. Okay, so it makes a difference what you want to call them, but that's what it comes back to. Yeah, it's just people rebranding existing trading techniques and making it sound like it's proprietary and it's their own. But there we go. So obviously into this, and this is what we're looking at. So obviously we've got the high here, and then I was posting in the group then that was entering a short. A lot of the guys in the group came along with me on this one. Stops above the highs. Obviously that's clearly where we're wrong. You know, if it pushes up, then I'm looking at this next level up here. In the end, we started getting acceptance back into these single prints, and we came straight back through them. Came back in to this consolidation here, which is obviously the consolidation that led to the push up in the first place. Okay. And all we did is we hovered, and now we're just ranging underneath the macro range highs. Okay, so obviously that's what's been going on. So obviously that's the short that we took from the highs, the long that we took from the lows, and now we need to look at what's going to happen next. Before we do that, first and foremost, let's have a quick look at today's video sponsor. Today's video sponsor is Prime XBT. If you've been living under a rock, Prime XBT are a platform where we can not only trade crypto, but we can also trade FX, commodities, and stock indices. This is my platform of choice for trading FX, commodities, and stock indices. If you do want to trade with these guys, check out our link down in the description. And if you use our codes, then you can get up to a $7,000 deposit bonus. And you can also get up to 25% off trading fees if you also use the second code. So both codes can be used together. Okay, so yeah, if you want to check out Prime XBT, go check them out in the link in the description. Right, okay. What could happen next? Well, let's zoom back out. Let's have a look at this. Right, so this is what we're looking at here now. So we're still in the macro range. Now, once again, like I will always say, the more times that we tap against this range high, the more likely it is going to break. So if price continues to hover around this region and try to break it again, then that could be a bullish sign. However, I'll never get bullish at range highs because I'm a range trader, okay? And this is something I teach within the group. You don't get bullish at range highs, you don't get bearish at range lows. You've got to flip your mentality the other way, okay? So when price is up here, I'm looking for shorts, okay? Just like when price is down here, I'm looking for longs. Now, the average Joe, especially if you're brand new to trading, is the other way around. Okay, you get very excited when price comes up here. Just like we saw this first time, this first little triangle, this little comedy triangle up here. People were long in the breakout, and in the end, they got destroyed. Okay? So you don't get bullish at range highs. You start either A, taking profit on your longs, and B, again, and or, looking for new shorts. Okay? If you're presented with them. Right, so up here, I'm not looking for new longs. Because if you're longing up here, then you're longing straight into the macro range high. You're longing straight into resistance. Okay? So it's just, why would you do that? The place to long was down here. Okay? So what could happen from here? Right, from here, we either do get back outside these range highs, and if we do manage to get up here and take out this wick, then first and foremost, I'd be looking for either a swing failure pattern of this wick, but more realistically, I'd be looking into this first standard deviation of this range. Okay? So this is what I'd be looking for, and this is coming in roughly around 27,300. Okay? Gets above that, then we're looking at the next deviation, which is coming in roughly around 29k. Okay? So they're to the upside. So you've either got these levels or these levels. Okay? Now, if price does roll over, first and foremost, remember, we've got the EQ here. Now, let's throw on a volume profile as well, like we normally do. And we can see what's going on. So if we do roll over here, then what we've got to be aware of is monthly open and value area high line up together. So you've got a region here. However, is it the strongest level? We do have a high volume node just below it, so there's potential that it's got some strength. Didn't mean to do that. Let's get rid of that. And there we go. If it does continue rolling over, then once again, we've got the macro EQ. Okay. If that doesn't hold, then ultimately, I'd be looking to at least take out these lows here. And if it does take out these lows, then you're coming in to your value area low region here. Okay. So it's just a case of just trading this level to level. Look at the strongest levels on the chart. So we can see here, you don't need 1,001 pieces of technical analysis on your chart. We can see here, just by looking at the volume alone and the range, we can see where the strongest levels are. Okay. And we only want to trade the strongest levels. Okay. We don't want to trade weak levels in between. Okay. We want the highest probability setups. Okay. Obviously, if you guys want to learn how I trade and to trade in the same style as me, then first and foremost, come over to our website, spitfiretraders.com. Link here to the free Discord if you want to pick up a load of alpha within the free Discord. And if you want to take your trading to the next level, then come check out our TA course, where we've got a huge learning community. We've got over 80 hours worth of educational content, which is everything from absolute beginners through to more advanced strategies. Elliott wave theory, we've got order flow analysis, we've got specific trading strategies for altcoins, Bitcoin, how to build your own strategies, and calculators. There's everything on here. And obviously, if you want a bit of a sneak preview, then the video library does give you an idea to what's in there. And as I've said many times before, obviously you get all this for a grand old price of 60 quid or 60 Great British pounds. Okay. So you get access to everything. You'll also get access, obviously, to any new live streams, including when we go live to do live trading for news events like yesterday's CPI. Okay, so that's what I'm looking for. Ultimately, if range high holds, then I'll be looking to roll over. If we get another break through this and we get successful, then I'm looking, first and foremost, this deviation. If that one doesn't hold, this deviation. Okay. To the downside, if we do get accepted back into value, then we're looking down at least to this EQ. If not, taking out these lows here around the macro point of control. Okay, again, just level to level. Don't overcomplicate it. I'm not bullish at range highs. I'm not bearish at range lows. And that's how you need to be. You need to be almost robot-like. Okay, that'll do for today. If you've enjoyed the content, make sure you hit that like button. Consider subscribing. And until next time, gang, as you were.